Hello everyone, it is Evan from the Trade Risk, Wednesday, April 8th, and I'm here with a market recap video and some trade ideas. Feeling a little under the weather, so I might be a bit brief in my recap. But the show must go on, so let's jump right into the SPY and today's action. We had the Fed minutes out at 2 p.m. today, and the market didn't really react too violently one way or the other. A little bit of whipsaw after the release came out, but that's to be expected. And really, I talked about this in my video yesterday, 204.50 on the downside, 209 on the upside. That is the intermediate range here that I'm watching. And while we are in the midst of that, I don't think there's a ton of edge one way or the other. It's just generally a more choppy environment until we resolve out of this range, and it could take weeks before we do. It could be tomorrow, so no one really knows. But what I am keying off of right now is Monday's action, is this candle here on Monday, which set the tone of a bullish bias in the short term. And yesterday we tried to continue higher, we failed, we closed on the lows. Today, those lows from yesterday held, and we basically closed just in the middle here of yesterday's range. So I think, really what you have happening here, and this is the note I sent out to my subscribers this morning, you have a little bit of this mattress of support now, 207 to 207 and a quarter, right? That's held now for 2 days. Call it. And on the upside, you have this 204.50 area all the way up to, I'd say, 209. So you have that barrier of resistance up top. So we're either going to be flagging out here and making perhaps a continuation of Monday's move, and we're setting that up for towards the end of this week, or we are just, we will fail to continue above 208.50, and we will roll back over and come back down here and test, the lows again, perhaps. But for now, you have this immediate range now that you're starting to that's starting to gain some significance here. So I'd call it, basically 207 and a quarter to 208.50, and that is the real short-term range that you can have on watch. So finally, on the SPY, I'll say one last comment. We'll get into it later. Energy down quite a bit today. SPY managed to still hold its gains, even though the XLE was down 0.8%, thanks to a 5% drop in crude. So that is interesting today. I'm trying to look at this sort of optimistically, but I am keeping an open mind one way or the other. Let's look at the other indices. The IWM was up really nice today, almost 1%, and you can see it's really close to the previous all-time highs here at 126 and a quarter. A little bit of resistance. It just seems to be kind of grinding sideways with a slight upward bullish bias here. Might even just say it's a rising channel. I could call it a bear flag all the way from this move here, even though it's retraced quite a bit of this potent down move here. But ultimately, the IWM small cap still continues to lead as it has all year, and the Qs had a very impressive day as well today, up 0.8%, and it's challenging some near-term resistance here. This is where we failed back last Monday, the 30th. So, the markets are trying to get constructive here, but they do have immediate resistance that they are all pretty much facing right now. So how that resolves is yet to be seen. When a market's at a decision point, inflection points like they are getting to now, moves can happen really quick one way or the other. So make sure you just keep an open mind with that. Let's look at some other markets. TLT had a nice day today, nice rally off the lows, I should say, closed basically flat. But from where it was this morning, it held up pretty well. 130, I'd say, on support, still seems to be holding. 132.50 to 133 up in here seems to be the upside resistance level. So let's keep TLT on watch. Still kind of short-term bullish trend consolidation type of phase. USO was hit pretty good today, down 5%, and took the air out of this recent rising trend that it's been in for the past week or so. So $18.65, $19. This here is still acting as resistance now. So, we'll have to see. USO, again, long term is just damaged, and it's still kind of chopping around and trying to stabilize here. So a 5% move is almost to be expected in a name like this. So we'll have to see what happens. Still holding up on the majority of this rising, this recent week's action, this rising trend, or this recent higher. So still relatively constructive, but we'll have to see if the bears do continue lower there. UNG, same thing, got hit today, only down 1.4%, and this thing is looking really weak today. Almost took it. If it would have closed a little bit weaker, I probably would have picked it up as a short again. I contemplated it, but I left it alone. It's basically back below the majority of all this recent supply. Second lowest close now here in the past couple of weeks now, aside from this bar on last Wednesday. So UNG looks like it could be rolling over here again. Again, it is below this bigger breakdown level of 1360. Moving averages are still racing lower. So it's tough to be optimistic on UNG right now until it at least reclaims 1360 in my mind, and then it's just back in this bigger mess to look at. Gold, down slightly again today. Again, it's still holding up from this recent leg higher. It's in the middle of this bigger range. Not too exciting to me. Silver breaking some support today, right around $15.90, call it $16. So we'll have to see if they continue lower there. Again, longer term range, just not all that interesting to me one way or the other. And the big leaders today really was the biotechs, and this finally looks after today's action rather, looks like it's trying to confirm here at least this short-term bottom right around 335 that it tested earlier this week, almost nearly. So the biotechs, again, we had this nasty quick leg down here after failing to hold these highs back around 375. Came down really fast, had a quick bounce, came back into support, and then we bounced again. So let's see if we can continue higher here. 352. This is the highs here from last Monday. So the nice 3-day bounce that we got where we rolled over. Let's see if they can continue again. Long-term uptrend is still a monster. So let's see. The bulls, I would imagine, aren't going to go down easy here. So let's see what happens. And the laggards on the day were the energy names. XLE, like I alluded to earlier, thanks to crude oil. Again, bigger range here that it is in, $80.80. It's really the upside target that the bulls need to try and crack above for some type of longer term / intermediate term breakout in this sector. So let's run through a quick set of names here. Apple. Tried playing this for a breakout on Monday. I stopped myself out yesterday after not liking the action too much. A little bit of follow through today, but nothing that convincing. Again, still looks to be in a little bit of a mess here. So Apple, just not that interesting to me anymore. Google, same type of thing here, 542, so it's finding some support, overshot it a little bit here on Monday, but basically it's trying to find some support right around 540, 542, a little bit of a bounce, moving averages curling down, not too exciting to me. Netflix had a real nice day today, putting in over 4% move to the upside, so it's quickly reversing some of these fast moving averages, broke the recent downtrend, and it looks like this 410 level is being defended, so almost like a double bottom for this gap, this big gap that off of earnings that the bulls are defending. Now, it's too early to call it a double bottom, but that's what they are at least trying to prove with a day like today. So Netflix could float here. 455 is the next real level of interest, so there is some room there for more follow through, but definitely a nice day for it today. And Amazon had a pretty nice day today as well, closing above 380. I don't have it listed here as a real significant level, but you can see all these topping tails over the past 2 weeks now. When Amazon got above 380, it was faded, so today you had your first real strong close, could mean that we are in store for a retest to run back to the top of this range here. So keep Amazon on watch for some continuation. Go to Facebook next, and Facebook retested the big breakout level here at $81. It's trying to hold up, closed just mildly red on the day, and it's trying to, again, let's see if it can hold pretty pent up of Monday's candle. Monday was the candle we had as we pierced below $81 and we shot higher for the entire day, closed above $82. Let's see if we can hold the majority of those gains and make this a convincing sort of at least a short-term bottom in Facebook, and maybe if we can go sideways a few days here, we could get another trade entry, above $83 to trade back to the highs. Twitter, I was in this. I actually stopped myself out today. I was in this, I was in this on Monday, took some partial profits yesterday, took the rest off today. It's still technically holding up fine. I keep stops really tight, and I don't like things that close near the lows, so I am out of Twitter for now. I will look to see this thing set up again. Hopefully we see some more continuation to the upside. It's still holding pretty strong. Fast moving averages are still up, so not too much to dislike there. Finally, let's look at GoPro. This was a trade idea I had on watch, $44. That was the breakout level I wanted. Looks like we were going to get it today, but it failed again to close above that level. So still eyeing GoPro. That one could be setting up. And Alibaba, this one I talked about in my video yesterday. I talked about it as a pretty interesting short setup if it could convincingly close above $81. And today it had a mean reversal to the upside, gapped above yesterday's close, and powered higher all day. So very quickly, Alibaba now looks like an interesting long setup if it could continue here above $86. I don't know if I would go chasing it after a 4% move and more continuation tomorrow, but it's something to consider. This is a base now. It's been working in for the entire month of March. So it could be interesting on some follow through above $86. Keep it on watch. Now let's look at a couple of names here to have on the list going forward. Pandora, I talked about this one yesterday. It moved today. I was looking for a trade to get in here above basically yesterday's highs, or above 1675. That definitely triggered today. I was watching it, but didn't want to jump in ahead of FOMC. And that's kind of all she wrote. She just continued higher all day. Nice 5% move, so it looks good. Let's see if it can flag out, maybe give us another entry here later in the week or next week. Nike is another name here now that could be interesting. Looks like it's trying. It is putting in some type of bottom here under $100, and it looks like it's trying to lift now. So look to see if there's some continuation above basically today's highs, above 101. Could be an interesting continuation trade back to the previous highs. HYH, here's one. I actually got involved in this today. This is a breakout to new all-time highs. Recent IPO. Consolidated nicely. This was a level of basically where it found resistance right into this $49 level. Spent a couple of months digesting that, and then it was basing out near the highs pretty tight over the past couple of weeks. Today it made a nice move, 2.65% on the day. So I took some long. Let's see if we get some continuation there. That one could be an interesting one to keep on watch. BSX, another one to have on watch again. It's been basing out, closed on the highs today. Still could use a little bit more, but for those of you who like these high tight patterns like this inside of a longer term trend, this could be an interesting one for you. And then finally, FIS. Again, this one has been carving out a bit of a range here between $67 and the $68.50 or so. Closed high right up against where all of these tails have been forming over the past few weeks. So let's see if we get some continuation above today's highs, and that one could be worth some further upside action. And that's it. That's what I got for today. So I hope you enjoyed, and hope you are navigating these markets and not getting chopped up in this recent range. And as always, thanks for watching. I'll catch you next time.